I read the reporting from Lingling and others, and you just think they don't want to do big stimulus, and I'm not sure what else the bull case rests on at this point.
Yeah, they've certainly taken an incremental, as opposed to a bazooka type approach, that they've slowly implemented reforms, but they're really not willing to pull the Band-Aid. I think some of that's driven by Fed policy. It's driven by some of the geopolitical macro narrative, a little bit about the global economy slowing. So they're taking this incremental approach, which obviously has left investors a little wanting. It is worth noting, Kelly, that, KWeb is still more than 45% off its October lows from last year. So we've simply given up some of these gains. And certainly, as your previous guest noted, the strong dollar has been a real headwind for non-U.S. equities in general, including China.
Yeah, although just one more to follow up on this. We were speaking with Derek Scissors the other day. I think it was Scissors who said, look, the Chinese stock market peaked in 2007. This just isn't a good place to put your capital.
Yeah, I think our long-running argument has been that the China proxies, MSCI emerging markets, MSCI China, 10 years ago had 11% and 2% in tech. So these were really value proxies, 50% financials and energy during a period of great growth outperformance. And that's really why we developed KWeb, was it gives investors an element of the growth in China's economy, which is simply not captured by broad indices like broad EM and broad China.
Yeah, that's fair. Sean, I'll turn to you. You're back in Shanghai. I'm very eager to hear how you would describe things on the ground there. What's going on with the property sector? What's the mood generally?
Well, Kelly, it's great to be back since I saw you last month in the studio. As you said, I'm back here in China, and right now we're facing a crisis of confidence. It's not a crisis of liquidity, which is why the government isn't lowering interest rates too much, because at the end of the day, there's no demand, both from consumers and from companies, to borrow money because they don't think that they can't get that money to work anywhere. People are really scared. Now, I painted a really negative position last month when I spoke with you and Ty, Kelly. Now it's gotten even worse. There are really three reasons why consumers and companies right now are even more nervous than before. The first is the real estate sector. You saw Soho, a major property developer, just announced that they had 93% profit drop year on year. That's off of a terrible 2022. And the big elephant in the room is what's going to happen with Country Garden, which was the largest real estate developer in China with over 3,000 different projects. They have missed paying bonds on a coupon last month. That sent a lot of ripples throughout the marketplace. Investors ought to be really cautious about getting exposure to China in the next 2 to 3 week period. Consumers now are nervous. They're cutting back. Some of the numbers might not be great for the coming 2 to 3 weeks.
Well, I'm looking through your notes, Sean, and Brendan, I'll put this question to you. There are some bright spots. He spoke with a lot of real estate agents and consumers, seeing a lot of trade down at restaurants, but says tourism remains a bright spot. EVs, the EV brands, BYD, battery maker Cattle, still strong. And maybe we're getting to the valuation point at which you can look at some of the bigger name online retailers. What would you say in response to that, Brendan?
Well, I think in general, we've known that this real estate issue is not a short-term fix. This is going to linger, and it's going to be Evergrande. It's going to be Country Garden. It's going to be Sunac, and there's a whole host of these distressed property developers that are continually going to flare up and have problems for years to come. It's the key is that the Chinese government wakes up every day with one mission, which is stability. And are they going to allow real estate to unfold into the quote unquote China economic, Lehman moment, this huge collapse? I don't think so. And I don't think any investor in China believes that this is going to unwind itself in some catastrophic manner. So yes, it's a problem. These companies are problematic. And it's worth noting the Chinese government isn't going to save them. We threw a bone to a lot of financial companies when they got in trouble, and the Chinese government's not going to do that. So, yes, consumer confidence, to Sean's point, is the problem. That's the problem with real estate. It's weighing on consumer confidence, which means domestic consumption remains weak, which is why they need to get property prices higher. You're going to see that done on the local level. And we do believe domestic consumption, that the companies within KWeb can benefit as consumer confidence, as consumption comes back. And certainly, we're still in the thick of earnings season. We got Baidu tomorrow and Meituan and NetEase on Thursday.